Show. My name is Jay Coulter, and today we once again have Tyrone Ross coming on for our Crypto Office Hour series. Now, we started doing this about 5 months ago, and the premise was I'm a skeptic of crypto and its place in a portfolio. Tyrone is an advocate for crypto for advisors and putting it in their clients' portfolio, and more importantly, the educational component of it. And I've been on a journey. I all of a sudden became a fan. I allocated to crypto myself in my own portfolio. But today, as we broadcast, Bitcoin is trading at 34.5 and ETH is up over $1,100. I'm becoming a skeptic again. I'm a Gen X advisor. I remember AOL. I remember Yahoo. I remember the internet bubble, and this feels like it. So today, Tyrone and I are going to unpack all of that. We're also going to take your questions. So if you're watching this live on Twitter, LinkedIn, Facebook, please just submit your questions in the chat and I will send them over to Tyrone. Tyrone, you've had some big changes.
Yeah. It's funny. It's like you said 5 months ago. I'm like, man, has it really been that long? But yes, I am in beautiful, sunny La Jolla, San Diego now. So been here like a month and a half. So yeah, there's been some big changes coming.
Yeah, it's funny. So before we went live, I said, hey, how's San Diego? And everyone says, well, it's 70 degrees and sunny every day, Jay. So
that's it. That's the only answer I could give you.
All right, let's start with what's going on with your company, Onramp Invest. It's been a while since we spoke about it. Bring us up to speed.
Yeah, super excited. So shout out to my Onramp family. I know they are watching. So main thing, we've hired an incredible CTO. So shout out to Nawar Nori, who's come on and taken over the development. We've seen our wait list approach almost $50 billion in AUM of advisors that are on our wait list. We're seeing incredible demand for people of what we're doing. We've started to, formalize a round of funding. We have some really, really cool people that we can't wait to announce that are investing. And then folks that are on our advisory board will be making an advisory board announcement soon. And I think the most important thing here is behind the scenes with the conversations that we're having with all of the names that folks know, qualified custodians. There's a lot of interest in what we're doing because, again, to make it clear to everybody is we're not a product. We're not an index fund. We're not an SMA. Like, we are the piping. We are the infrastructure to allow financial advisors to interact with Bitcoin like they would with Apple for a client. And that means model, plan, bill, performance reporting, research, data. Like, we're piping all of that into advisors' existing workflow so they don't have to leave, so they don't have to do anything. It's compliant. It's regulatory. We're working on a really good piece now about updating your ADV and the language that you need in that. So we're going to be pushing that to our wait list. So if you're an advisor and you're not on the Onramp wait list, I suggest you get on that because we're going to push that piece out to our wait list first. Worked on that with Chris Stanley, who's an attorney and an advisor and an investor who I can't name yet because we're going to announce him when we put it out. So that's kind of what we're working on. So we want to educate advisors, but we also want to give them the tools, integrated, holistic financial, to provide integrated, holistic financial advice. Because as a financial advisor who built a practice on crypto, I realized that, right, there's the technology on the traditional side and the crypto side, it just didn't talk. So it made it horrible experience for clients, horrible for advisors. And I think one of the reasons why advisors don't want to engage with this space right now is because a lot of the things all of the things that I said, they can't do, right? There's a bountiful amount of products, but I can't interact with Bitcoin and crypto like I would with any other asset. So we're extremely excited. And we're seeing a lot of growth in internally, interest externally. So hopefully by the end of Q1, we'll have something that folks can dig around and play with.
To learn more about Onramp, visit onrampinvest.com. That's onrampinvest.com. Tyrone, I think the biggest challenge is actually getting educated. And so the first question that I have is from an RIA over in South Carolina. Okay. And they said, Jay, I enjoyed the shows that you've done on crypto. Who does Tyrone think that we need to follow on social media to increase our understanding of crypto. So besides yourself, Tyrone, who are the other thought leaders that people should follow today?
So there's a few, and I'm gonna break this up into advisors you should follow, right? Because the messenger is the message. You want to learn from advisors that have been here. It's very few, but they're advisors, and then crypto, thought leaders who I think they're not carnival barkers, right? They're actually giving really good advice. So on the crypto side, I think Adam Blumberg and Interaxis right away. Adam Pokornicki, who runs the first RIA that has been earmarked as the first RIA to give advice on Bitcoin. Dame is the name of his firm. He's in California as well here. So Adam Pokornicki, Adam Blumberg, Morgan Richard, Isaiah Douglas, and I will end with Jackson Wood. So those five. I would definitely follow on Twitter. I would follow their work, their CFAs, their CFPs. Like, these are folks that have been in the space. I think Jackson has been in the space since 2012. They're not with the Pollyanna. It's very, guided, smart, but they've been, in the space and trailblazing. So I would definitely, suggest folks follow those five. As far as crypto and education, a couple things here. I need all financial advisors to get familiar with Delphi Digital. Kevin Kelly, Anil, Tom Shaughnessy, like Delphi Digital's research is the closest thing that you'll get to institutional-based research in the crypto space. And I think financial advisors will look at that and it'll be very familiar to that Morningstar type of research and things that you're used to seeing. So Delphi Digital is one. The other is, again, if advisors and their investment teams or teams are just looking to get it explained in a very basic, lucid way, head over to YouTube and Andreas Antonopoulos. He explains it very basic, probably the best. Two more. Fidelity Digital Assets. Yes, Fidelity Digital Assets is a thing. Most financial advisors don't know that. Ria Batoria puts out incredible work. Follow them, read everything she writes. She is remarkable. And then the last I will go with right here on LinkedIn, hidden gem, Michael Creedon. Unbelievable. The pieces, the missives that he puts out every single day, how he lucidly explains and articulates the crypto space. It is a must. So if you are on LinkedIn, follow Michael Creedon, tell him I sent you. He is incredible. And I personally, this is the truth, I'm crypto 24/7, 365. And if I can do it 25/8, 366, I would. But I go to LinkedIn purposely to see what Michael Creedon writes. So couldn't recommend him more.
Excellent. Adam Blumberg and the Interactive team, they've been on the show before. They are great educators for financial advisors. The challenge with crypto, and I saw a graph that it was so simple. It started out, I don't understand crypto. Oh, I understand it. I got the hang of it. Now I don't understand it. It's the journey I've been on, because you think you get it and then you think you don't. So the next question, Tyrone, actually, it comes from me. You ready? Internet bubble, 1999. Man, I thought I was a smart guy. I was day trading, AOL, Yahoo, and a handful of companies that don't even exist anymore. I made more money trading than I did as my job as a lowly financial advisor at Charles Schwab. I thought I was a genius.
Shout out to Charlie Schwab.
I think there are a lot of Bitcoin geniuses right now. I see it sitting at 34,500. We've got some volatility. I think since our last show, it's up 80%.
Yeah.
So what do you do if you have not allocated to Bitcoin yet?
Nothing. Learn, educate yourself, continue to read. And again, I want to make this very clear. I actually have a lot of folks who are financial advisors or folks who are in the space that kind of disagree with me on this. I think most financial advisors shouldn't be doing anything. They should be learning. You shouldn't be looking to allocate. You shouldn't be looking to do any of that. You should be learning right now. Don't feel the pressure of the headlines. If your asset manager hasn't put you into Bitcoin, they should be fired. That's nonsense. One, that means the person doesn't know how fiduciaries work. and holistic planning works. I'm not going to ruin a relationship based on allocation to one asset. That's dumb. And if you think that Bitcoin is going to be the savior of your book of business, God bless you. It won't, right? So these are folks, right? Financial planners, financial advisors, yourself. You help people retire. You help them send their children to college. You help them take care of sick family members and travel the world and move wherever they live the life they want to live. It's not about Bitcoin. That's a piece. So don't make it about this one thing. Second thing is you don't stand a chance against folks like myself to do it 24/7. I rarely do anything in the traditional world anymore. I've been in this space since 2015, and I do this every day, all day. I absorb it. So advisors need to realize this is something you need to lean on COIs, centers of influence, but continue to get educated. And I will venture to say, yeah, there's bubble-like behavior here. When something goes up like this, it's quick to throw it's a bubble, right? But I continue to say this. At some point, traditional folks and financial advisors are going to have to stop looking at Bitcoin with that traditional lens. None of your traditional tools work with trying to analyze, describe, advise on, build a practice on Bitcoin. It just doesn't work. You got to throw all of that out, build a new construct, new ways of looking at it, new valuation metrics, new terms, new possibilities, new tools. And then start to say, okay, well, is this a bubble based on looking at all of the things that have happened in the last 3 years and what's happening now? So I was saying, like, I don't care about price. Personally, the price doesn't wake me up in 10 years and I want to know the price then. But I've been saying to people, if you've been in the space the last 3 years, none of what's happening now is a shock, right? Breaking 20,000 is a shock. This price action now is more shocking to me because, and you're starting to see the Google searches trend up. It's not, oh my God, family and friends texting an email and it's financial advisors. It's the largest RIAs in the country. It's Wells Fargo commenting. It's JP Morgan yesterday, right? You're having people who are, damning it for the last 3 years, finally saying, all right, I'm gonna throw my hands up. There's something here. So I think most financial advisors should be spending time educating themselves, really getting in the rabbit hole, getting around people that have been here. Don't rush out to make a mistake just because you're trying to follow this. And again, that FOMO, following that bubble. It's, happy birthday, Bitcoin, right? January 3rd, 12 years now. It's still early, right? Relax, be thoughtful in how you've gotten to this point as a financial advisor, how you've built your practice, how you've actually gone about making really smart decisions for yourself and your client. If you do that, you'll be okay. There's those of us that want to make it easier and more accessible. So lean on us and other people, like I mentioned, and I think we'll be able to help you run your practice. Go be the hero for your clients. That's Onramp's job. We need to make you look like a hero for your clients. Our job is not to say, okay, well, just go jump in and do whatever. No, do what it is you do. Run a practice, talk to your clients, advise, guide them, be their trusted source. And when you're ready to do this little quirky internet money thing, we're here.
The Interaxis team piped in while you were talking and said, it's okay to tell a client, I'm going to do more research and get back to you. Tyrone, your answer and what the Interaxis team are saying, that is the correct response. It isn't to be the showman and say we need to go allocate to Bitcoin today. I love your response, Tyrone. That's why you are a thought leader in this space. So along those lines, though, so this question comes from an RIA over in Birmingham, Alabama. Where do we put Bitcoin as it relates to an asset class? Is it going to be a currency? Is it an alternative? How do we, because we like to put things into neat little style boxes when we build a portfolio. Where do we put it?
First of all, roll tide. I know it's sick of it, but roll tide. I got to shout to Bama, man. Shout to Bama. So again, back to what I was saying before. Old hat, right? And new opportunity here. Everyone wants to put Bitcoin in this box. Unfortunately, it doesn't fit into that. Is it currency? Well, it depends on where you are in the world. Is it money? Yeah, it's that too. Is it digital gold? Is it a store of value? Is it, and I'll be completely honest here, right? I was on a webinar with Steve Kurz at Galaxy, right? Chief Investment Officer at Galaxy. And again, you see a lot of those folks running with the digital gold narrative. I don't think I'm there yet, personally. I don't think digital gold is the right narrative for financial advisors. Again, I could be wrong. I'm not trying to be right, though. I'm just saying, for me personally, I never had clients that was like, oh, this is digital gold. Like it wasn't that. So to this point, the truth is this. It is still a speculative asset. Let's just tell the truth. It's still very early. I like the long dated call option on the store value description. Again, in terms of what it is that we do. Is it that VC alternative sleeve? Possibly, right? I spoke to a large RIA that said they had $10 billion of their equity sleeve that they would consider allocating to Bitcoin. Does that mean that they think it's similar to equities or penny stocks or whatever? Don't know. We didn't dig that deep. But I think how you look at this and how you are going to invest in it on behalf of clients has a lot to do with, again, the type of clients that you run, that practice that you run. My clients were under 40, young, tech savvy. They didn't care about gold. They didn't care about gold before. They don't care about it now, and they don't think Bitcoin is that. If your clients are 60, 65, guess what? The gold conversation is going to be a lot easier to have with them than, oh, well, this is just some new technology with blockchain and this, that, whatever, right? You want to explain to a 65-year-old blockchain or gold, right? Like that's where we're at here. So I think for me personally, I think where you invest it, where you're going to put it, time horizon, all of these things has a lot to do with, again, all right, is this a trade, right? If there are advisors that are going to be money managers and want to rebalance and actively trade and, so he's right. It's not gold. Yeah, it's Bitcoin, right? It's like, it's not gold. Shout out to We Live to Serve, who's doing some work with us in Onramp. We're happy to have him as part of the team. So I think I say like this right now, think it's speculative, right? It's a speculative asset. That's just what it is. It's growing, it's evolving. And I'll end on this. Paul Tudor Jones, right? They wrote a beautiful piece explaining their reason for investing. But when Paul Tudor Jones got in front of the camera and they asked him that, what did he say? It's the fastest horse, right? Fastest horse in the race. My job is to pick the fastest horse.
Yep.
That's what I did, right? And yes, read this piece for more constructive, fastest horse in the race. Because then you start to get into the inflation thing. Is it inflation come in and all this? Relax, learn, figure out what's going on here. And again, if it starts to make some sense, small allocations for clients, and you look at the risk-adjusted returns and look at it that way, as opposed to trying to cram it in some box for understanding. And I think that's the best way to folks to move forward with it.
So Paul Tudor Jones made $1 or $2 with trend following models. I was talking to a friend of mine in Chicago who runs a hedge fund, and we were talking about a new product. And we were thinking about a commodity-based trend following product into the RIA space. We were ballparking, we could raise, $50, $100 million. And I said, well, why don't we put Bitcoin in there as well? And we would raise more money just because Bitcoin would be one of the assets that we would trend follow in the futures marketplace. It's ludicrous. It's kind of like putting ESG on a portfolio, whether it has ESG or not, and it raises more money. Sky yesterday announced that they are adding a $400 million. You're probably more familiar than I am with this product, a hedge fund for those space. Mm-hmm. They don't say what it is. They're not buying Bitcoin. I'm assuming that they're buying companies in that space. If you're a financial advisor, you're looking at all this noise and all this nonsense, deciphering through it, and I'm saying, because I already know your answer. Which one do you have? Bitcoin itself or the service providers?
Well, first of all, I tweeted this yesterday. The fees in the crypto space now is similar to Wall Street in the 80s. So these products and all the things that are out there, the fees are out of control. So that's the first thing advisors need to look at. Second thing I would encourage financial advisors to look at, whether that's, these products, and then where they custody is the insurance of that custody, right? Of making sure that clients are safe and secure there. So I'm going to walk back here. Those are two. And then the main important one is this. I personally, and again, this is where, and I spoke to an RIA out west here yesterday, and I said I wear 3 hats now, right? My financial advisor hat, my financial advisor, CEO hat, and then my crypto hippie hat, where it's just like everything is like, oh, it's great for the space. Me personally, if I'm a financial advisor, which I am, and I was working with clients, which I was and still am, I'm not letting my clients do any of this stuff. Me personally, I'm not. My FA CEO hat says, well, yes, these are opportunities there. As a platform, we are going to make those available and give advisors choice. As a crypto hippie, what you're seeing now is people taking advantage of price action going parabolic and saying, launch everything, get it all out there. Let's just do it. There's money to be had. Let's raise a bunch of money. Advisors can't fall into that. Got to be very thoughtful. Again, we're fiduciaries, best interests of the client first. Go directly, find a way to do it directly, right? It's a bearer asset for a reason, but find a way to do it directly at a qualified custodian that's there, right? Big news that, again, won't get a lot of headlines is Northern Trust is getting into the custody space for Bitcoin. 13 trillion of assets they custody, 1.3 trillion of AUM. That's huge. That's a news or marker that folks should be looking at. Qualified, custody is improving, prime brokerage is improving, best execution of prices, right? I was having a conversation with the folks at Digital Asset Research. They said at any point that you check the price of Bitcoin, it's off by at least 1%, right? Like, and there's very few stats in this space that I'm like, wait, what? Gotta pause here, guys, right? And girls, take time with this, right? Things are, the infrastructure, the piping, the research, everything for advisors isn't there yet. This is just the truth. That same advisor that I was talking to yesterday, trailblazer in the space, having a lot of the conversations with the providers in the crypto space, they're not familiar with what it is, what we do and how we do it. There's a reason why there's nothing built for advisors yet, because it's hard. It's easier to go retail. And there's a reason why the retail space is, and tools for retail investors are more robust. So yes, as far as a product suite, there's plenty out there of baubles and trinkets for advisors to go, oh my God, I just want to touch them all. Relax. You shouldn't. What you should do is take time. Again, you can reach out, ask questions about where they custody, ask about the insurance, ask about the fees, be very transparent with this, because guess what? You got to be transparent to clients and got to be transparent with those regulators when they come knocking too. So I would be very clear on what it is that you're buying or what you're trying to do. And there's a lot out there right now, but there's still lack of clarity on how they're getting exposure, what the fees are, and things like that.
All right. Next question. We get this every episode. So I'm going to change it a little bit and let's set up a role play. Something unfortunate has happened and you're working at a wirehouse town. You're sitting at a Merrill Lynch, UBS, Morgan Stanley office. Your prospect comes in and says, Tyrone, I want to invest in Bitcoin. What's the answer?
Well, Mr. and Mrs. Client, unfortunately, we are unable to have conversations with clients in regards to Bitcoin and cryptocurrency right now due to the firm's, rules and what I'm allowed to do. However, what I encourage you to do, what I'm doing is educate myself and reading these books and these materials. I highly suggest that you read these, I'm reading this book or whatever, because, advisors at wirehouses make, I'm pausing my answer here to say that advisors make recommendations on stuff they're reading, whatever, all the time to clients. So back in role play here, I would say, I'm reading this book and this is the research that I'm looking at here. I would encourage you, to read this as well. It's a really good book. Maybe give the client a copy in their financial planning review and say, read this. We do think there are some conversations being had as this starts to grow where we'll be able to at least engage with you, later in the year. But until then, again, we're just being very constructive about how we're moving forward with this. So educate yourself. I'll do the same. And then hopefully we can revisit the conversation at the end of the year. Now, end conversation. One of the things that we also want to do at Onramp is provide read-only access to advisors. So I would love at some point, it looks like the broker dealers are going to, one of my predictions is that the broker dealers are going to start to dip their toe in the water here. When you look at, the news that was put out. The SEC gave guidance on broker dealers. You look at, again, I've heard wind that, wirehouses are putting teams together to at least start to look at this. And again, JP Morgan and Wells Fargo putting things out. But to that point, I would love to walk into a Merrill, a JP Morgan, a Goldman or whatever and say, well, look, we just could provide you read-only view. Your advisors could see what your clients are doing away. They can't transact. They can't do anything. When you guys are ready, we can turn you on. But we're just going to give you read-only view. So if a client comes in, you can engage the client, you can advise them, and then the advisor can get access to pull that into your financial planning software to at least see what the client's doing. That's a tremendous value add. And if you don't do that, then you're going to start to see assets leave en masse. So yeah, that's what I would do if I'm at the wirehouse right now. There's no excuse not to learn. I was at a wirehouse when I got introduced to Bitcoin. It was 2015, late 2015, 2016. A friend told me about it. I tried to bring it up in advisor meetings. I was literally like sworn to death not to bring it up ever again. Right. And my mentor was like, look, if you want to do this crypto stuff, you got to get out of here. Like you're not going to be able to do it here. So I would encourage any advisor in that same seat, learn as much as you can. And when you're ready, we'll welcome you into the crypto rabbit hole.
Yeah, I agree with you. I think later this year, and we'll get to your predictions in a minute for the year, but I do think at some point we are going to see the wirehouses acquiesce just because it is growing as such a valuable asset in a portfolio. Before we get to that, I'm a novice. I own Bitcoin. I own ETH. What's the difference between the two?
I love that you said ETH and not Ethereum. It makes me so angry when people do that. ETH is the token. Ethereum is the blockchain.
I learned from you, man. I pay attention.
Without getting too in the weeds here, why I always tell financial advisors and anyone starting out to read crypto assets is for exactly that question. Ethereum was inspired, right, by Bitcoin, right? And all coins at some point are a derivative or inspired at some point by Bitcoin. So crypto assets take you on that journey into all the other coins that have evolved. Also, what folks really don't know is, I get a lot of questions about Litecoin a lot. Litecoin is the second oldest coin, but ETH has, again, in terms of size and what you're seeing with decentralized finance and what's going on in the Ethereum blockchain, especially how it's been performing, has the ability, right? Let's think of ETH as true technology, programmable money, right? That's how folks like to describe it, where you get a lot of your stable coins and smart contracts. Bitcoin is more of that monetary system, the hard money, true base layer of peer-to-peer value transfer that is robust, that has network effects. So it's almost as if, again, with Ethereum, which I'm a fan of, which I think, again, is the future of finance and the future of Wall Street, is more of that programmable technology possibility of all things, right? Decentralized finance, and Bitcoin is more of that sturdy, stalwart that has more of the network effects and really powerful technology, immutable, decentralized, right? All these other things that you want to get into. So they're more similar in that regard for the novice in terms of, they're both blockchains and things like that. But when you really start to get into the weeds, you start to see where it breaks off, especially as ETH 2.0 now. And that's a whole nother, show, but there's ETH 2.0 now, where they're moving from proof of work to proof of stake. Bitcoin is proof of work. Ethereum was proof of work and moving to proof of stake. But advisors don't care about that, and they shouldn't right now. But we'll get there.
Okay. And a follow-up to that. So I opened a Coinbase account and bought the Bitcoin, bought some ETH, and then I just took a little bit of play money. I bought XRP. Here was my rationale for it. Not a good rationale. And it was going up rapidly.
Right.
Then it continued to spike up. And you know where we're going. Some novices to the space don't. It just continued to spike up. I said, I don't understand it, and it's gone up. I'm just going to sell. And I did, fortunately. And then it crashed. The reason for the crash, the best I can tell, is the SEC investigation. Could you help the Bitcoin novices understand what's happened with XRP and why that had such an impact on the price?
Yeah, so the SEC came out and said, so there was always this, if you were in the space, right, the XRP clan and everyone that wasn't in the XRP clan, there was a bunch of us that stayed away from it because it was clear, if you knew any better, that it was a security. It was just never, the SEC had come out and said Bitcoin and Ether in the clear, right? But XRP was always this thing out there where it's like, it's a security, right? Like, so the SEC finally came out and said they wanted to investigate it. And, that was kind of like the nail in the coffin. Everyone's like, oh, okay, well, there it is. The SEC is now going to say, all right, this is a security, guys. Sorry, it's that time, right? And the regulatory environment, again, the prediction here, right? The regulatory environment is going to increase a lot in regulatory scrutiny. Is going to increase a lot this year, I think. And I think that was the start of it. So what that means now is everyone was acting as if it wasn't. It was on exchanges. It was in funds, right? You saw Bitwise get it out of their product, right? If it's a security, whoa, we got to get it out, right? Because now there's a whole other set of things that come along with that, right? So that's really what happened. And that's why the price dropped, because you saw exchanges distancing themselves from it, people getting it out of their funds and things like that. So with that, again, there's no market for it. The price drops. And here we are. Also, I would, if you do have an interest in that, right? So I had someone reach out to me about XRP, and they asked me, what is the difference between XRP and Ripple? And I'm like, how is it I know more about this than you, and you have money in it and I don't? That's a problem. I would encourage folks to look at Ripple, the company. Not really all that bad what they're trying to do, especially if you're like myself and you believe in, a fair financial infrastructure system that allows people access and quick time, quick settlement and things like that. Ripple, the company, they're doing some really cool things. It was the token that people had a problem with, and folks didn't even know those two things were separate. But I would encourage people to read a little bit more on Ripple and what it is that they're trying to do. And Brad Garlinghouse, who runs it, smart gentleman. I had just listened to a podcast with him shortly before this news came out. Super smart. But again, we all knew what was going on there. And again, he's also very wealthy. So maybe he has the money to fight this. And then, it's not a security and the thing runs to $4. Who knows? But I'd always stayed away from it. I kept clients away from it. If they did it, it was on their own. And they told me later, like, I did it anyway. But I think you're seeing a lot of that now where people are going, well, wait, what is the security? What is this? They just didn't know. They were just buying it because it was cheap.
That's right. And I told you that was my thought process for it, and it was easy to do because it was on my app in my Coinbase account. It was also easy to get out a distinction there, though. Actually, that cleared things for me with it being a security versus what the SEC has decided ETH and Bitcoin are.
Mm-hmm.
We're at the half-hour mark. Before we wrap up, Tyrone, this is January 2021. I'd love to get your predictions for this space this year.
So I have three of them. The first is, I believe at some point this year, you will see a very large RIA come out and say that they have a significant portion of their clients and book of business allocated to Bitcoin, whether that's 25 million, 50 million. I think we'll see that at some point. Second one is the regulatory scrutiny environment, whatever you want to call it. And I don't even mean this in a good or bad way. I think you saw some really great news with the OCC at the tail end of the year about, banks being able to custody digital assets, and then saying that, banks can, run nodes and distribute ledger technology and all that, like stable coins and, real-time settlement and all that stuff is something that they could actually do and should look at. That's really, good news as well, especially for those, again, that I fight for at the bottom for financial access. So There'll be a lot of regulatory scrutiny, clarity, things like that. Hopefully the SEC continues to involve custody and qualified custodians and advice and guidance for advisors as well. So that's my second thing. And then the last is, I definitely think at some point you'll see one of the wirehouses, probably Goldman, right, jump out and say, all right, we are now giving our advisors the ability to, right, provide advice or engage in this space or whatever. I think we're going to see that. The BDs just can't wait anymore. I think the updated guidance from the SEC for broker dealers that they just put out the 3rd of December or something like that, or the 23rd of December, I think kind of gave BDs a clear way of saying, okay, well, they're like, look, one, right, is this all you do? Two, do you have regulatory procedures and policies for running this type of business? And three, can you make clients aware of all the risk that goes along with it? And there's a 5-year look back, by the way. So I think broker dealers now are getting what they need, right? And FINRA saying, listen, just let us know you're dealing with it and what capacity. So the clarity is coming there. So I think the end of the year, you'll see the BDs start to jump in.
Yeah, nothing outrageous about those predictions. And I bet they unfold before the end of the year because it just makes good business sense. Tyrone, I appreciate you coming on the show. These office hours are incredibly helpful for my community that's just starting to learn about crypto and the whole space. Listeners, if you'd like to learn more about Onramp, please visit onrampinvest.com. That is onrampinvest.com. Tyrone, thanks again.
Thanks again for having me. Appreciate it.